some trading. Alan Nuckman is standing by, Chief Market Strategist of BullseyeOption.com. Good morning to you, Alan. Thanks for being here. So we're taking a look here in the energy space. You're taking a look at Halliburton. By the way, energy has been one of the worst performing sectors in November. But now what for Halliburton?
Well, first, I want to be thankful for a lot of things because I'm bullish. I'm thankful that we're 15% off the lows and about 15% off the highs right now in the S&P after all that's happened. Also thankful that the VIX is down here at 20, and the 10-year, like we just talked about a minute ago, is down here below 4%. It's a very strong sign of stability. Another thing to be thankful about is the dollar index, the dollar decline in that topping out. Now, crude oil, like you mentioned, has been on a little bit of a decline after being the best sector for the year. Crude oil's been 85 and 95 for about 6 months, and now we're below that range. But I think there's still some opportunity for that sector to bounce back after this heavy profit taking.
All right. So at this point now, when you take a look at names like Halliburton in comparison to some of the other names in the group, do you actually like what's going on with Halliburton? You said you're feeling a little bit bullish. We're off the lows, we're off the highs. But is Halliburton a standout in the group?
Yeah. 5% off its 52-week lows, and it's about 20% off its June highs. So it's back to the breakout. It had traded between 25 and 35 for 4 months, and now it's coming back to that 35 level, giving us a second chance for entry. Now, in this range, we've got about a $30 midpoint support to lean on. So what I'm looking at is the $30 call. The April $30 call is trading for about $9, and it's $6 or $7 in the money, 5 months at a time, a deep delta, so it's going to act like the stock, and it's going to benefit as this support point holds, and we'll see how this sector can make another surge.
Right, understood. So you're buying a call here. When you think about this group in the world of commodities, right, you have the dollar, which has pulled back to 106. That's a big thing in your mind, right? When you see the dollar pulling back, it makes you as a trader say, hey, I'm going to do this. What do you say?
Yeah, a lot of commodity resources are going to benefit from a weaker dollar, obviously, and so will stocks. That had been really the headwind for a lot of asset classes. And now that we've seen that major turn and that decline, and it's because that we see the rate destination in sight, that we're going to be at 5% in 2023 is going to be the peak for short-term interest rates. This is what the markets are telling us, and then it gets down to 3.5% in 2025 to 2030. So it looks like we've digested this, like our turkey dinner. And the markets are moving forward, and that's why we've seen a nice, healthy bounce from this bottom. Crude oil, for me, is a barometer of the economy. Now, we've seen a bit of a pullback here recently, but I think as the economy comes back a little bit stronger than these negative expectations, that I think crude oil can move. Let's remember, the Fed did exactly what they wanted to do. Crude oil was peaking at 130. Now we're down at 80. You do the math on that. That's pretty deflationary.
Mm-hmm. By the way, I don't know if you remember, I think is this Funny Farm, 1988? Do you remember the Chevy Chase movie where they're trying to sell the house and it's Cue the Deer? And I'm watching you and I'm waiting for a deer or something to go by in the back. Hopefully not a bear at the window. It's beautiful there, Alan.
We've got our deck. There's definitely wildlife up here.
Well, you're able to be on with us today, Alan Nuckman. Appreciate you. Thank you. Chief Market Strategist, BullseyeOption.com. Coming up, Black.